Today, we'll be talking about the principles of investments as mentioned. And just as a start, I want to first start with the one that is most common, the one that most of us have learned throughout our life, be it in school or otherwise taught even by our parents, and that is savings. So essentially, you want to know what savings is. So savings is essentially just putting money aside into what we consider a safe instrument, be it a bank account. For some, it could be a circle. For some, it could also be our phones. Nowadays, we save through our phones. We have different cash apps that we put money in. But the key reason for savings is that you're able to get this money as quickly as possible. That is a concept that we call liquidity. We want to be able to, in a span of a minute, be able to access this money, the saved money. Again, another principle that we look at when you're talking about savings is the low risk nature of savings. So most of the time you'll find that savings are put in very low risk instruments. So think about your bank account, think about M-Pesa, think about those mobile apps that people put money. They do not have any, or they have very little risk. Let me say that. Let me not say any risk. Again, for low risk, again, you get low return. So majority of these savings instruments do not offer very high returns. So for instance, here in Kenya, you'll find that, for a bank account, if you put your money in a current account, you will get 0. So if you put 100, excluding any charges that could be there, a week, 2 months, or a year from now, what you will get is 100 shillings. But we have things like fixed deposits where you can be promised a certain return, which would be low. So the same 100 shillings can earn you maybe 5 or 6%. So in a year, that 100 shillings will be 105 or 106 at the end of the year. So essentially, savings is just preserving the value of your money. So on the other hand, probably it's good to look at what investments or investing is. So in a nutshell, investing would be, putting money to work for you. So money is generally put in assets that promise growth or that have the potential of growth.